What's going on, guys? It's your boy Tickers here. I'm back with another video, guys. And today's video, guys, we're gonna have to talk about. I don't think the recession's over. I'm just gonna be honest with you. I just don't see. I know we're in a nice little bull run here, a nice little bear market rally, as I like to call it. And I don't think it's over, guys. So we're gonna get right into it. As always, leave the like button, hit the like button, leave a subscribe for me, guys. It really helps appreciate it. Lets me know you appreciate me, and lets me help support the channel, get more videos out there for y'all. I was scrolling through Twitter earlier, and I seen Stockmo saying, when I was teaching in the classroom, we were often expected to give our time and do things to our job for our job for free, things that were above and beyond the job description. Do you work for free in any aspect of your job, or do you feel you are fairly compensated? Now, I was reading this, and I got to thinking about my own job. I'll be honest with you guys, I'm just a normal guy. I work at a warehouse job, and I definitely go well above and beyond what I'm asked to do, what I need to do. I I go out of my way to help fellow employees, so I'd say no. I don't think I am fairly compensated, to be honest. I'm paid well, sure. I don't think for what I do, am I fairly compensated? No, I don't think so. Not with the way inflation is right now, and it's got me to thinking. I want to know what you guys think too. Are you fairly compensated for your job? And uh, I hate to even ask, do you still have your job, man? 'Cause there's been so many layoffs, and people are preparing for this big bad recession supposed to be coming this year, guys. And we're gonna get into all the companies that are still doing layoffs right now, guys. Like especially in big tech right now, it's looking real bad. So uh, we're gonna watch this little video to talk about. Since I brought it up, we're talking about the tech stocks and how they're really looking to struggle this earnings season, guys. And my prayers and thoughts go out to all of you if you have lost your job, man. I really hate it, and I really just want to wish you all the best if you have, and just try to stick it out. Try to find something else if you can, guys. And just know my prayers and thoughts go out to all of you if you have.
Be nearing the end of its COVID-induced overextension hangover and might be looking to return to performance-driven positive trends. Joining us with more is Erica Clower, Technology Equity Portfolio Manager at Jennison Associates. Good to see you, Erica. So in terms of this hangover, because of COVID, because of, constrained supply chains, as we sort of see these things the wrinkles start to come out, what are you looking at in terms of your expectations for this year?
Well, thanks for having me. At Jennison, we are, I would say, cautiously optimistic. We've made our way through a lot of difficult times coming through this COVID hangover, as you mentioned. We've also seen a lot of bubbles pop with regards to things like NFTs, cryptocurrencies.
Yeah, cryptos and NFTs have had a really bad year this year, or last year especially. But they're actually doing pretty good for now this year. Everything's running like crazy. You see Solana, it's up like 40-50%, guys. So, I mean, Crypto's doing pretty good this year so far, but I'm with them. I don't think it's going to last. I really don't.
Many of the valuations of the highest priced technology companies have come in significantly. So we've made our way through a lot of difficulties, and estimates have come down to more reasonable expectations. At the same time, there are still some near-term headwinds associated with things like the strong dollar, and also some of the regulatory problems that we are facing with regards to shipping products to.
And let's just be honest too. Like one big headwind still is that Jerome Powell's probably will still keep raising interest rates, guys. Like we're not done with the interest rates yet. Like and the market's pricing in like the pause or the pivot or whatever. But I mean, Jerome Powell hasn't said anything to that effect. I think he's maybe hinted at slowing down a little bit, but I mean that's still raising the rates if you think about it. Like it's just slower. I mean, it's still going to, keep them really high where they're at right now at 4.5%. I think it is right now. They want to finish the year at 5. So, I mean, they let you know right now they're not planning on cutting anytime soon. They want to finish this year, 2023, at a 5% federal funds rate. So, I mean, that just tells you all you need to know right there that we're not done with this yet. They're not seeing inflation come down as far as they want it to, and they've already given you their target, 2% interest rate, 2% inflation. Sorry, 2% inflation. So they're going to keep raising these rates till they see that.
China and strained relationships with that country. Having said all of this, at Jennison, we're really looking out over the next 3 to 5 years, and we see many different large vertical markets that are still in very early innings of growth, things like 5G, autonomous driving, artificial intelligence, that we think are going to push the technology sector higher.
So let's break some of that down. Let's start with, say,
you talk about crypto, I had blockchain technology into that as well. I mean, that's still a rapidly growing space. We have yet to see the full use cases for not even just crypto. It's just blockchain ledger technology, guys. Like it's going to change the way we do things, regardless of crypto. It don't even matter what crypto does. Blockchain is just a very useful innovation, and it's going to change the way we do everything, the way companies do interact with their consumers, and the way the internet interacts. You know, it's going to be a big deal.
The likes of Apple bringing more of their development and
you hear Kathy Wood tell it. We got a lot of convergent technologies coming together. You know, I know not everybody agrees with Kathy Wood, but that's one of the few things I actually agree with her on, is that got a lot of these big technology ideas coming together to really just accelerate human progress and innovation, you know.
Design in-house. Can we expect those sort of moves as really sort of after that wake-up call about perhaps diversifying some of their supply chains, when we did see the lockdowns in China and a lot of companies were like, well, what do we do now?
I think we will continue to see companies diversifying their supply chain to reduce their dependence on one single source supplier. And so for those companies that are supplying some commodities, I think that the environment will be more difficult. However, for those companies that have sole source, large barriers to entry to compete with their products, I think those companies will relatively be better positioned. Fortunately, many of those companies are US based, whether they're software companies or hardware companies. There's a lot to choose from.
I also want to talk to you. You mentioned EVs there. Obviously, Tesla has some of its own issues given what's happened with Elon Musk and Twitter. But then as we look...
Tesla recently just cut prices on their EVs too. They were massively cutting prices, especially here in the US. I've seen that the Model, I want to say Model Y, they were selling it for close to 50,000. Now they're selling it for like in the low 40s now. Yeah, that's insane, man. That's like that's almost like a 15-20% price cut, man. Just, whew. You can get Teslas for nothing, guys. You get their stock for almost nothing now too, but that's a different story compared to what it was anyway. We're not going to go too much more into this video. I just wanted to say that there's still a bleak outlook as far as tech sector goes, and Wall Street's already flashing the fear gauge, flashes the warning the stocks might be headed off a cliff. So even with this big rally we're having, they're saying, yeah, it ain't gonna last, and I agree with them. I don't think we're done yet. We ain't had that massive capitulation that you normally get with recessions and depressions and stuff like that, and just market sell-offs in general. So retail hasn't really gotten out yet. There's been a lot of selling, no doubt, but it don't feel like the bottom. Maybe I'm wrong. What do you guys think? Do you feel like it's the bottom? Maybe we're getting close. It seems like we're talking about these big tech companies. A lot of them things the economy's going to get worse. I mean, look at this. Amazon's set for a brand new round of job cuts. They just laid off 10,000 people, guys. They just did that a couple months ago. Now what was that, back in like November, I think? November, December? And they're laying off another 18,000. This is their largest job cut ever. Laying off more than 18,000 employees among its corporate ranks. The largest job cull in its entire history, guys. They have never, ever laid off this many employees. Not in 2008, not in 2000. No, never. This is their largest layoff ever. And even Microsoft, guys, they're finally feeling the pain, guys. Microsoft's cutting thousands of jobs across divisions. And that's the sad thing, is like, this is ahead of earnings, guys. So it makes you wonder, because that's the big fear, right, is the earnings recession. All these companies now are trying to cut costs and cut out all the workers that they feel like aren't really there to aren't really keeping their how do I say this, keeping their pay worth being worth their salt, basically. So they're getting rid of all of them, and that's to cut costs and try to help these earnings out. So what are these earnings reports going to say? Basically what I'm trying to get at. They're coming up in a couple weeks, couple months for some of them. So some of them are right around the corner. Tesla's is next week, so I definitely keep my eyes on that. Microsoft plans to cut about 5% of its workforce. It was about 11,000 jobs. So Microsoft's cutting 11,000, 5% of its workforce, guys. And we're in a bull market. This don't happen in a bull market, guys. You don't get big tech companies cutting 5% of their workforce when the market's just rallying, and then everything's great, the economy's fantastic, we're turning around now. Microsoft's telling you something completely different. So just saying. And I was wondering when they were going to get hit because they're usually the last ones to fall because they're such a big company. So, man, it's just I don't want the economy to get worse, but at the same time, it'd be great for stock prices to get them up real low. Just buy them up, gobble them up rather real low. A lot of people are going to get out of the market. I know they will. And usually that's why I make these videos, guys, so you're not scared of the market. Me, what I'm doing, nothing I say is financial advice. I want to build up some cash, maybe go ahead and build up a good little reserve, maybe wait for the stocks to come back down like they probably will in February, March, let's say. I think we'll probably be around the lows again, February, March, maybe. And maybe even break new lows, honestly. Who knows? But I can't predict the future. I don't have a crystal ball, so don't take anything I say as the gospel. But my guess, yeah, we'll be back to new lows at some point. And it'll all depend on the earnings of these big tech stocks. So, yeah, that's all I really want to say to you guys today. And I just want to make sure come check in and say hey to y'all. And I'm out here praying for y'all, man. I hope everybody's all right. Everybody makes it through this bad time we're about to go through. And if you like the video, guys, please like the video. Please subscribe if you're new around here. And I'll catch you guys in the next one. I'm out.